Hey, hello friends. Welcome back to my YouTube channel 30 CAGR. A few days ago, one of my clients asked me a question. If one had to choose between ISS strategy and PDR strategy, what would that be? I thought it's an interesting question and want to make a short video explaining about pros and cons of both these two strategies. So in this video, we will try to understand the objective of these two strategies, and then we compare both the strategies and see which one suits better for what type of goals that we all have. Before I start, one disclaimer is that I make use of both these strategies heavily for some obvious diversification benefit. We will discuss about that as well. Let me give a little bit of introduction about myself. My name is Raj Konakalla and 30cagr.com is my blog. There are some strategies in this blog like ISS or PDR, and of course I'm also working on one or two other strategies. The goal of all these strategies is to make consistent returns in stock market without taking too much of risk, because trading or investing in stock market is already a risky thing. So what I try to achieve through all these strategies is to minimize the risk as much as possible. Even if the returns are lesser, that's fine by me. All I want is slow, steady, consistent returns by taking minimum risk. So if you haven't watched these strategies in detail, first please visit my blog and watch 4 parts of ISS strategy and 3 parts of PDR strategy. And of course, if you want to avail free trading bot or other algos, those are also available in my blog. Last but not the least, if you haven't subscribed to my YouTube channel, please subscribe immediately and hit on bell notification. Okay, even before getting into the differences or pros and cons of these two strategies, first let's try to understand the objective. These two strategies have their own objectives, and we need to understand that first and then move to other parts like pros and cons. If you have seen my ISS videos, or for that matter PDR series, by now you already know that these two were developed for a specific reason, right? This ISS strategy is for option traders. Whoever would like to trade in options, they pick this ISS strategy. And generally, for those who would like to make some diversification in their portfolio, or who are working professionals who do not have much time to invest in stock market, they generally pick this PDR strategy. That's the old story. But remember, of late, I have seen so many professionals opting ISS strategy as well, as in so many working professionals opting ISS strategy as well. Because now we have made this a fully automatic trading bot, which makes life so easy that even working professionals can take up this strategy. ISS deals in options trading, and this gives us some consistent monthly returns. Whereas PDR deals with equity stocks, and the objective or the goal here is to make huge return in long run. This is what Warren Buffett or Rakesh Jhunjhunwala has done, right? They make use of equity investing and has earned a lot of income in the long run. So we are also trying to do in the same way, but this strategy is a little different. Okay, this is a unique 30-day strategy where we enter on the first of every month and then exit in the last day of that particular month. So yeah, as I said, if you haven't watched, please go watch the video and come back. It will be clear for you. The objectives here are totally different. One is for monthly returns and then the other is for long run returns. It really depends on the goal of the trader. So with this little bit of background, now let's compare these two strategies and see what works best under which circumstance. All right. So these are some basic differences. First is the capital requirement for ISS strategy is 2 lakhs. Because we are option sellers, we need at least 2 lakhs. However, for PDR, there is no such requirement. You can start with 10,000, 20,000, 1 lakh, 1 crore, or you can scale it up to multi crore as well. That's one advantage that we have in PDR. Of course, ISS can also be scaled. Even if you have 1 crore portfolio, you can easily trade in ISS strategy, but the minimum amount required would be 2 lakhs. And then another important factor is the returns. How much returns do we get in these two strategies? In ISS, we aim to get around 50% return on an average every year after taking out all the expenses and slippages. When it comes to PDR strategy, we make a decent return of 30 to 40%. But again, let me tell you, all these returns are average per year. In ISS, some months you might get higher returns, some months you might get lower returns. But on an average, we try to achieve around 50%. Whereas in PDR, some years you might get even 50 to 60%, and some years you get even 20% or negative returns also. Remember, in PDR strategy, if markets are in bull phase, you get a lot of returns. If you take 10-year market cycle, 4 to 5 years or at least 3 to 4 years, markets will be in bull phase, and those are the years you earn a lot. You have to wait for those 3 to 4 years in the 10-year cycle. And some years like 2 to 3 years you might even go into negative territory as well. Of course, we have our own ways of defending that bear market, but still you might end up in profit. As you can see, the drawdowns here are even 30%. Okay, so you need to prepare yourself in such a way that you can handle 30% drawdowns. Remember, this happens to everybody, especially if you are trading in PDR strategy. There is no other way to earn if markets are bearish, right? Warren Buffett faced this problem, and Rakesh Junjunwala faced this issue. So many people face this issue, especially if you are into investing. You cannot escape bear phase of cycle. Anyway, let us first discuss about the returns as well. So in ISS strategy, mostly the returns are consistent. Out of every 12 months, 9 to 10 months we earn profits, and other 2 to 3 months we end up in loss. Whereas in PDR strategy, there is no such thing. You might earn 6 months and lose 6 months, or you might continuously earn well for 15, 16 months, or you might not even trade for 1 year. If markets are continuously bearish, then our scanner will not give any signals, so we have to end up sitting in cash for almost 6 months or 12 months as well. So in PDR strategy, as I said, we earn a lot when markets are in bull phase, and when markets are bearish, then we either sit with cash or we trade very less. And coming to drawdown, ISS strategy comparatively has lesser drawdown, only 10 to 15%, but PDR strategy has a drawdown around 30. And the time required for this in ISS strategy is less than 5 minutes a day. Since the bot does everything for you, all you have to do is just spend 2 to 3 minutes and check whether the positions have been placed by bot or not. And if positions are placed, I think you are good for the day. Whereas in PDR, still, as I said, all these strategies, do not require much time from you. Even in PDR strategy, you just have to spend 1 hour, maybe half an hour on first of every month, and then half an hour again on the last day of every month. And effort is negligible in both the strategies. As I said, you just need to put very little effort, and then you just have to enjoy the profits. And talking about daily monitoring, for PDS strategy, it's not required because it's just a one-time churn in a month. That way, it's very beneficial for those who are working. Whereas in ISS strategy, it really depends. Though most of the days we don't need to pay any attention, or monitoring is not required, but at least you need to pay attention in those days when we have some technical glitches, or every day you need to check how your broker is charging the brokerage, and all such sort of things you need to keep a watch at. So I would say daily monitoring is a little bit required in terms of ISS strategy, whereas for PDR strategy, it's absolutely not required. And now let's look at some of the pros and cons of this strategy. First is, in ISS, we all know that the returns are very, very high, right? And then the income is also pretty consistent. As I said, 9 to 10 months, generally we end up in profits when it comes to ISS strategy. And the bot takes care of all the trading. In case if you want, you can WhatsApp me. But this is the main advantage of this strategy. You don't need to do anything absolutely, and the bot will take care of everything. Some of the cons of this strategy: you need to spend 5 to 10 minutes every day to do a few checks. Okay, first in the morning, you need to check whether you have enough capital or not. Does your trading account have enough capital or not? And during the market, spend 1 minute or 2 minutes and see whether bot is sending correct signals or not. And after market, maybe at the night, you need to check whether your broker is charging you correctly or not. There are some cases I saw over internet that generally sometimes due to some technical glitch brokers overcharge. Okay, so ensure that it's not overcharged. Your broker is charging you correctly every day. Okay, all these checks probably might take less than 10 minutes, but still you have to do all these checks. And then higher capital required as we discussed. So if you have smaller capital like 1 lakh or below 1 lakh, you cannot trade in this ISS strategy. And yes, very rarely technical glitches might happen and we need to account them as well, right? So this is a con of ISS strategy. Now talking about PDR strategy pros and cons, one very important advantage of this strategy is you don't need to check the market daily, right? Which is a huge relief, and you make stress-free income here. It's not like you are going to, check the market every day and then sit in front of the terminal. You just have to, spend 1 hour, trade with certain stocks on first, and then you leave it like that. Okay, if you want, you can place a stop loss of 15%. Otherwise, that's also not required. Only on the last day again you come and exit the stocks. So this is like a completely stress-free type of trading. And less tax. Remember, PDR comes under short-term capital gain, which is 15% tax currently. Of course, you have to add it to your existing income. But ISS strategy, you need to pay 30%. So uh, when it comes to taxation, PDR strategy is always beneficial for us because you are not paying 30% and paying 15% upfront. Even before starting this strategy, you are earning 15% profit. And some of the cons of this strategy: during continuous bear market, we need to either stay away or book losses. This is the toughest point for so many people. When people ask me, I will continue with PDR strategy because that looks very profitable and we don't need to spend so much time in the market, blah, blah, blah. I only tell them it is very easy to say that you continue with PDR strategy because it is giving you profits now. But if markets are in bear phase continuously for 1 year or 2 years, would you be able to sit on cash continuously without investing even a single penny? So, do you have that kind of conviction? Or let's say even 6 months, if markets are continuously bearish for 6 months and we encountered a loss of 20% or 30%, you still have to continue. That is how you build wealth in PDR, right? Even Rakesh Junjunwala has suffered 5-6,000 crores during bear market. Even Warren Buffett has suffered a lot during bear phases of market. Okay, but still they continued investing. That's the single most important mantra of PDR strategy. When markets are bullish, your compounding gives you a lot of return. When markets are bearish, you get loss and you cannot avoid that. Only if you understand this fact, you need to pick PDR strategy. And then another disadvantage is you need to stick for long term. It is not a strategy like ISS where you trade for 1 year or 2 years and you make some good return and then you go back. After you start PDR strategy, maybe in the first 6 months or 1 year, markets can be in bearish phase and you might not get any return. So it is a long term journey. For PDR, you have to stick to the strategy at least for 5 years or 10 years. Only then you see some good returns. All right, so these are some of the pros and cons of both the strategies. I hope now you got an idea what is the objective of ISS versus what is the objective of PDR strategies. If you are someone who can at least spend 5 to 10 minutes and want a very good return, then ISS strategy is the best. However, if you are really busy working professional and you don't want to spend time in markets every day, then PDR is the best. You can have some stress-free trading in that. Over a period of time, it rewards you massively. So it really depends on your goal and your mindset, what type of trader or investor you are. As I said, I make use of both the strategies. Let me spend a minute and tell you why I do that. PDR strategy, as you all know, it gives good returns in those bull phase markets, or sometimes even if markets are calm, still the strategy gives a lot of income because we pick only high quality stocks. Whereas when markets are falling, obviously in PDR, we can't expect returns, right? And when markets are falling, generally IVs goes high. When IVs go high, in options, all premiums also go very high. So the returns that we get in options trading are higher during bear phases of stock market. So in bull phase, I get good returns from PDR, and in bear phase, I get good returns from ISS. Even if I get loss in PDR during bear phase, ISS will give a lot of income, which complements each other. And at the end of the year, probably I would not be having so much of loss, or I would probably end up with minor profit as well. Okay, so my goal always is to check yearly returns, not even monthly returns. At the end of the year, if I'm making some profits, I think I'm good with that. So because of this reason, I make use of both these strategies. All right, that brings us to the end of this video. And if you haven't joined my Telegram channel and Twitter, please join these two. And if you want to avail free trading bot for ISS strategy, then you can WhatsApp me on this number. Of course, if you want to connect with me on other social handles, then you can also join me on Facebook, LinkedIn, Insta, or Quora. That's all we have for this video. Hope you enjoyed, and see you in the next video. Thank you.